we're not crazy. The point is, it's the world's first digital treasury asset. There's $100 trillion worth of treasury assets that are negative yielding debt or zero yielding debt or cash. And that's like, in essence, minus 15% real yield. All the bonds are broken. All the treasury strategies are broken. This is the solution to $400 trillion worth of investors' problems. They've all got the problem. It's the solution to 7.8 billion people's problem. They're all generating salaries in cash, which is debasing at 15% a year. And it's the most disruptive technology in our lifetime. And you know, I've been on your show. You had me talking to you about 8 years ago. We're talking about Apple and Amazon. If you recall, you could probably pull the clip. I invested $50 million in Apple and Amazon 9 years ago. I made $500 million off of it. It's a 10-bagger. Not that hard. I'm not proud of it. All I did was buy these digital networks when 99% of the people didn't agree with me, when they were unstoppable, and I waited. And I swore to myself, if I ever saw another one, I wouldn't just do it personally. I would put my company into it. So we ran into the biggest crisis of our career in 2020. I had $500 million in capital. I saw a digital network, which I think is 100 times better than Google or Facebook. It's Facebook for money. Yeah, if you'd asked me about Bitcoin in February of 2020, I would have said, what? No, it's not for me. I don't get it. If you'd asked me what I thought about business in April of 2020, I would have said, this is just the scariest thing I've ever seen in my career. Main Street shut down and Wall Street's already recovered and the K-shaped recovery. It's just very odd. By the time we got to the second quarter, what we knew was this. Our revenue wasn't going away. Our business value proposition was better than ever. We were going to generate 4 times as much cash flow because all of our marketing, sales, and services activities dematerialized. Travel and expenses dropped by 98%, and we started Zooming everywhere. We started uploading videos to websites. So we had all this cash coming. We had a block of half a billion dollars of cash sitting there. And we got dragged into macroeconomics, and we realized that it was worthless, and the investors didn't value it. And so we had a problem, and we started looking for a solution. The paradigm shift here is twofold. The first paradigm shift is, for the first time in 30 years, people in the Western world are living in environments where the currency is weakening more than 7% a year. It's weakening at 15 to 20% a year. That's the first paradigm shift, because that changes how you discount bonds, how you discount value stocks, how you discount commercial real estate, and you got to think different. And the second paradigm shift is Bitcoin's the first digital monetary network in the history of the human race. We never in 5,000 years could make money work on a computer network. And it wasn't clear it was going to work when it was $1 billion. But by the time we got to June, it was $200 billion. And, you guys follow digital networks, Facebook, Amazon, Apple, Google. Every good idea for the past decade has been a digital network. And when they get to 200 billion in market cap, they're pretty hard to stop. So our conclusion was, this is like Facebook for money or YouTube for money. And we jumped on it. Today, it's $1 trillion digital network. It's the fastest growth to $1 trillion of any network in the history of the world. It took 12 years. Google took 22 years. Amazon took 24 years. Apple took 42 years. Microsoft took 44 years. Those are the only firms that have ever done it. Bitcoin has done it. And so the paradigm shift is digital monetary network, a solution to everybody's problem, and COVID lockdowns, everybody's got a problem. You put those two things together, you have to think different. And that's why we did what we did. Ask me when I'm going to sell it. Never. I'm not going to sell it ever. And so the narrative has rotated. Long-term institutional deep pockets, and the asset class has matured. And of course, the law of large numbers say $1 trillion entity has more inertia to it than a $100 billion entity. And what do I expect to happen? I expect it will grow aggressively toward gold, and it will flip gold, and then it will demonetize gold and subsume gold. And probably it'll be first $10 trillion and gold is 10 trillion. Then it'll be 20 trillion and gold will be 5 trillion or 4. And gold will eventually become an ornamental metal. Bitcoin is going to suck the monetary energy off of negative yielding bonds. I ask people, where did the money come from used to buy Bitcoin? 49% is stocks, 20% is gold, 10% is bonds, 19% is property. Basically, stocks are going to be negative yielding if you're value stocks because they can't keep up with the rate of monetary expansion. Everybody knows bonds are destroyed. Ray Dalio just told the world they're all negative yielding. By the way, he thinks they're negative yielding versus CPI. The real point is they're negative yielding versus the cost of capital or the rate of the monetary supply expansion, which is like 15 to 25% a year. They're screaming value destroyers. The most important thing to know is that although people call it a cryptocurrency, it's not. It's a crypto asset. Money has two flavors. It's got the medium of exchange currency element, and it's got the store of value asset element. Bitcoin is a great store of value, digital gold. What's the addressable market? $100 to $200 trillion. Half of all the stuff that floats around the system is store of value. People just want to keep their money forever. The other aspect of currency is I want to buy a cup of coffee 1 billion times a day. People are going to do that with dollars and won and yen and euros and Chinese currency. They're going to do it on Apple Pay and Visa and MasterCard and Square and every other, and Ant and every other regulated payment rail. The government, as long as it functions in China, the US, or Europe, is going to control the currency. And they've given it tax treatment. When I give you $1 million or 100,000 and you give it back to me a year later, there's no capital gain tax on it. It's not a taxable event. It makes sense to use dollars as currency. On the other hand, Bitcoin is property. It's been legitimized as property by the IRS, by the SEC, by the OCC. It's not going away. It's not going to be currency in the US. It's not fast enough, and the tax treatment is hostile. It is going to be property. And to the extent that people buy it from regulated custodians subject to AML KYC regulations, and banks like Morgan Stanley, where they're buying it now, or from players like Fidelity, the government's just going to make sure that it has the same AML KYC regs and clarity that gold or silver or stocks or bonds or any other derivative instrument would have. It's not threatening to a government if I'm swapping out my gold for Bitcoin. So you can expect that they'll have regs around the ladder, and that's totally fine. And as they clarify those even more, it's just going to be bullish for the asset class, because that's the green light for every insurance company and endowment to buy 100x more than they bought so far. If you had a block of Manhattan, you would hold it a long time because you thought Manhattan's always going to be valuable, but Bitcoin's better than Manhattan. And so it's the ultimate long duration asset, or in other words, an institutional grade treasury reserve asset. You ought to buy it and hold it, and if you ever need cash, just borrow against it. This is the world's most successful decentralized network. It was constructed to be outside the control of a CEO, a company, a regulator, a country. And look, you couldn't be certain of it in the first year or 2 years. It's pretty much the perfectly designed crypto asset network. You just got to wait 12 years and see, will it be hacked? Will it be banned? Will it be copied? And when it was $1, $2, $3, $5, $10 billion, I couldn't be sure. There's nobody that can change this thing at this point. The fork wars have been fought. You could see the blood on the street, and it's all been decided. Bitcoin is the world's best treasury asset. It's like 100x bigger than the next thing. The risk is 1,000 times less than the next thing. The addressable market is 100 times bigger than it is right now. It's its own thing. Everything else in the crypto universe is venture capital. If you have a venture capital portfolio, if you have the wherewithal to invest in crypto ventures and you want to study it, well, in my opinion, they have 100x less addressable market and they're 100 times more complicated. But if you want to do that and you have the capital to do it, have at it.